Bitcoin holds 106k after US credit downgrade. What comes next? Bitcoin just wiped out billions in short positions, then bounced back like nothing ever happened. But here's what's even crazier. The US just got hit with a credit rating downgrade. And the markets didn't even flinch. And the whales, they are not just moving quietly anymore. They are big, aggressive, and hungry. This isn't just another price swing. This could be the moment where the next real move begins. Hey everyone, I'm Neil, and in this video we are digging into what's really driving Bitcoin's extreme volatility. The macro risks you can't afford to ignore, on-chain accumulation from the whales, and what the heatmap and CVD are telling us about the next breakout or breakdown. This could be the turning point. So hit like and subscribe, and let's track Bitcoin's next move together. So the big news this week, as you've probably seen, is that Moody's just downgraded the US credit rating by one notch. That's it. The US is no longer AAA. But instead of panic, the New York stock market actually rallied on the first trading day. Dow closed up plus 0.32%, Nasdaq closed green at 0.02%, S&P edged up plus 0.09%. So, no downward trend at all. But what's more important? Bond yields. 30-year US Treasury shot up to 5.03%, then settled around 4.9%. 10-year yield hovered near 4.5%. No bond panic, no mass sell-off, that's key. Although the country's credit rating has declined, there was no panic in the bond markets, no major sell-off. Stocks went up, bonds held steady, no panic, no risk-off sentiments. And that tells us one thing. Markets aren't pricing in fear, they are still chasing liquidity. Even the Fear and Greed Index is flashing 70, solidly in greed territory. Now, let's talk about real money. Last week, 785 million USD flowed into crypto funds, 5th straight week of inflows. Bitcoin alone saw $557 million, Ethereum had 205 million. XRP and SUI, small inflows. Solana, still leaking. And it's not just ETFs. I mentioned in my last video that I will keep you updated on what MicroStrategy, or strategy should I say, is doing. And now it's confirmed. They just bought 7,390 more Bitcoins at an average of $103.4k. That brings their total holdings to over 576,000 Bitcoin, with unrealized gains topping 21 billion USD. At this point, we honestly need a meme for this. Yes, there's a lawsuit hanging over Sailor, but the market doesn't seem to care. And now, even Japanese firms like Metaplanet and US companies like Quantum Biopharma are jumping in. Now, let us dive into the heatmap. The price of Bitcoin started around 105.5k and followed a sharp decline, dropping all the way to a low near 102k. After that, it moved sideways in the 102k, 103k range, forming a strong support zone around 102.2k to 102k. That support eventually held, and we saw a solid bounce. Bitcoin began a steady climb all the way back to 105.5k, breaking through multiple short liquidation zones along the way. You can see those green and yellow bands, they got taken out as the price pushed higher. Once price hit the 105.5k level again, it started ranging between 104.5k and 105.7k. During this phase, two thick liquidation zones formed, acting as a clear support and resistance. The price attempted to break through the resistance multiple times but got rejected each time. Eventually, it broke through the 105.7k selling and reached up to 106.6k, triggering a fresh wave of short liquidations all the way up. However, the momentum wasn't strong enough to keep going. The rally was rejected, and price settled back into the 106k to upper 105k range, with 105.8k acting as the current local support zone at the time of recording. Key resistance zones. Price stalled here earlier. Breaking above could trigger another wave of short liquidations. Secondly, 106.7k, 108.3k. There is a thick cluster of liquidation orders here. If bulls push through, it may accelerate very quickly. Then 108.9k, 109.5k. Major resistance zone. likely to be a battleground if price gets that high. Key support zones: 105k, 105.6k. It's currently acting as a short-term support. Holding this keeps the bullish case alive. Then 105k, 102.6k. Wide buffer zone where price previously consolidated. It's a strong base if retested. Then 102.5k, 100.6k. Heavy support with a prior bounce activity. If this fails, expect panic selling. Conclusion. So, what does all this tell us? We are looking at a classic liquidation-driven setup. The move from the drop to 102k, followed by the grind back to 106k, was a textbook liquidation sweep, first flushing over leveraged longs, then trapping the shorts on the bounce. Right now, price is trading in a tight range between strong resistance around 106.5k and solid support near 105.8k. With heavy liquidation zones both above and below, it's primed for a high volatility breakout. What's to watch for next? If price breaks above 106.6k, we could see a move to 107.6k, possibly even toward 109.5k, depending on how strong the momentum is. On the flip side, if 105.8k fails, the door reopens to a drop back into the 104k to 102k area, a region that's already shown a lot of price interaction. On-chain data shows accumulation picking up again. Small wallets, those who detain less than 1 Bitcoin, they are buying. 1 to 10 Bitcoin holders are still selling a bit. But large whales, especially the 10k, more than 10k Bitcoin wallets, they are slowing down. That shift, where small buyers stepping in while large whales cool off, has historically led to upward price moves. We are also seeing positive spot volume delta, especially on Binance. When that happens, and spot buys outweigh sales, momentum builds fast. Now, let us break down the CVD, the cumulative volume delta, and what the whales are doing. First, the selling wall of 106k has weakened, and as of the time of filming, it has broken through that level. Starting with the brown line, which represents 1 million to 10 million orders. These mega whales are still active and steadily absorbing dips. They haven't flinched during the volatility. Next, green and purple lines, which represent 1k to 10k and 100k to 1 million orders, they are buying steadily, but with a bit more caution. Now, retail. The red line, 1k to 10k, and orange line, $100 to 1k, they are doing most of the selling, especially the red line. It dumped hard after May 18th, and the orange line has been trending down all month. And finally, if you look at the blue line, which tracks all orders combined, you can see it started to dip slightly, showing that overall participation is cooling, even though larger players are still supporting price. But overall, buying pressure is outweighing selling, even if just slightly. So, to make it short, retail's bailing, volume is cooling, while the market isn't euphoric, whales are still holding things up, and that keeps the bullish structure intact. And now, before the last part, let us shift gears to altcoins. Ethereum is showing strong fundamentals. Exchange supply just fell below 4.9%, it's a historic low, which means strong long-term holder behavior. Bitcoin exchange supply is at 7.1%, showing that whales are holding, not selling. Now, what about altcoin season? We are not quite there yet. Bitcoin dominance is rising. That usually means altcoins lag, and right now ETH and Bitcoin and other Satoshi pairs still look weak. But here's the setup. Historically, altcoin season begins after Bitcoin hits new all-time highs. That's when money rotates out of Bitcoin and into high beta altcoins. So, yes, it's time to start watching closely, but it's not quite alt season yet. On the sentiment side, our macro overheating indicator is still near neutral, around 0.4. That means we still have room to run before we get overheated. Emotional indicators are flashing bullish, and historically, those have preceded strong rallies. That said, we haven't yet seen the return of speculative retail capital. If that kicks in, things could move fast. Alright, let's wrap it up. The macro backdrop is tense, but this rally isn't broken. Whales are quietly accumulating, ETF flows are still coming in, and that 106k resistance is getting weaker, but we are not there yet. We need a clean breakout above 106.6k with volume, and that's when the real door opens. If that wall cracks, the move to 109k could move fast. On the flip side, if 104k holds as support, that will be the clearest sign that this market is still in a bullish trend. But this is not the time to chase. It's the time to manage your position, control risk and stay patient. The trend is still alive. All we are waiting for now is the ignition. If you found this video helpful, don't forget to like, subscribe and turn on notifications. You're watching this in real time, so don't miss the next breakout. I'm Neil, and as always, stay sharp, stay strategic, and stay informed. See you in the next one.